Hi, and thank you for having us. We should probably start with confession. We haven't prepared this as much as we would have liked to, so this is going to be very ad hoc, and we're going to be very honest in questions. There's no preparation. This is like we would do it over beer. So I'll let everyone introduce themselves because they can pronounce their names much better than I can ever attempt. And then I'm gonna ask them a couple of questions, and then you can ask us any other questions on Twitter, and please ask us from the audience staff, so that it's even less evident we haven't had the chance to prepare. Your turn.
I'll have to talk very loudly. Can you hear me? There's not enough microphones. Is that okay at the back?
No, I can hold this one.
Okay, try that. Better? Yes. So I'm Nasir Zubairi. I'm a venture partner at Finleap. We build FinTech companies. We've launched about 9 in the past 10 months. I've been in financial services for about 18 years. You meant to say, doesn't he look really young? I worked in banking for 12 years, in capital markets mainly, a bit of commercial banking, and have been running sort of businesses in financial technology for about 7 years now.
Thank you very much. Christian Rebernik, my name. Pass it on. So, yeah. Christian Rebernik, I'm CTO of Number 26. I just joined this year, but we also just started this year. So, but myself, I'm since 17 years in the online industry at one or the other place. I worked in the most closest to actually the finance industry, which is the gambling industry. For quite 9 years, I was working for Bwin, one of the few Austrian success stories in growth. Yeah, very excited to be here, even without beer.
Cool.
Yeah, my name is David Schreiber. I'm working for the Silicon Valley company Stripe. I'm not sure whether everybody knows who or what Stripe is. So
I'm sure nobody has one clue, so you probably should.
No, I think to put it in simple terms, I think Stripe is probably one of the simplest and sleekest way to process payments online. We power companies like Kickstarter or Slack in their payment infrastructure. And I'm leading Stripe's growth efforts for continental Europe, and yeah, really excited to be here.
I was being sarcastic. We do know who Stripe is, just so. Okay. Yeah.
Hi, my name is Videesha Kunkulagunta. I'm a principal at Redstone Digital. It's based here in Berlin. It's a venture capital firm with a new type of model, which means that we have limited partners that have single-line limited partners that have their own funds. We currently manage 6 different funds, 3 early stage, 1 growth, and 2 buyout. One of our LPs is actually Berliner Volksbank, and another one is a family office. So we see the full spectrum of FinTech companies.
Yeah, good idea. So, which kind of brings me to my first question. No, not the swapping. What you said last, which is the full spectrum of FinTech. I heard a couple of things today that inspired this question. One of them was a talk from Holvis extraordinaire Elina, who was really cool, except she said a number of times, we in FinTech do this and that, very many times, in fact. And I found that interesting because to Holvi, FinTech is what Holvi does, meaning a B2C proposition that's valuable to their consumers. To the industry, FinTech is, yes, some B2C, thanks to a number of people on the stage, but for the most part, and I'm presuming that kind of proportion is hugely skewed towards the second part of this, B2B, and the type of technology that would be powering either existing banks or new propositions, or at least kind of the back end. So how do each of you see this, right? What is your gut? And there's no right answer. I guarantee nobody really knows this, not the Gartners, not the Forresters, but kind of what's the proportion of B2C versus B2C in FinTech? Nasir?
I don't know what the exact proportion is. They're all interesting markets in their own rights and have all their little nuances, and every fintech firm tries to focus on a particular market where they think they can generate revenues and deliver value, right? I think what's interesting though is we talk, yes, as you say, generically about fintech. I said this to you last night, Duena, at the drinks is I really don't like the word fintech. It's a nice way to position a set of firms to venture capitalists and within the industry to make us look really cool. But an industry is defined by its participants and the customers it services to some degree as its market. And you know, if we're looking and talking and working with banks, which most fintech firms do, it just seems silly to try and distinguish them in this way. Either banks are fintech firms or fintech firms are financial services firms. But we're all targeting the same customer. You don't hear people on the street saying, "Oh, I'm just going to pop down to my fintech to get some money out," right? That's not the way it works.
Well, I'm sure some people would like to hear that.
And the one other thing is the segment we miss out quite often is capital markets, right? You know, I just saw on the Creditech presentation, banks are not innovative. I would fundamentally disagree with that in capital markets. Yes, they have an incentive, as that's where they earn a hell of a lot of money. But I'm sorry, you can boo me in a minute, but I used to be a high-frequency trader. I mean, the algorithms and data we used to do with that, I mean, light years ahead of anything, right? So banks are innovative. They've just been less innovative in certain areas, and that's led to opportunities for other firms to do things.
Really quickly, just to be horrible in continuation of what you said, since I'll take this opportunity, there was something in the Creditech presentation that I found very interesting, which is, I think Alexander said, there's no other choice but for the banks to become pipes, because who else is going to be, no, he didn't say there's not a choice. Who else is any good at doing core banking and who has the kind of money to do core banking? That's not good enough. That's not what's going to keep them becoming a pipe. How do you see this from number 26 perspective, for instance? Do you think that's going to happen?
I think that one of the things why banks are not perceived maybe as innovative is because the perception for many processes which actually consumers interact with banks, it's not innovative. It hasn't changed over the last course of 20, 30 years. And if you compare it to e-commerce, where I think everybody in this room has bought something online already at one point of time, and maybe most of the time nowadays even, in finance, I think there are just 50% who are actually using mobile banking. So it's not there yet, and this is really the market adoption is just now changing, and that's why I think fintechs are innovative. And I think the core thing about core banking essentially is that and I've talked to many core banking system providers nowadays, they are at the heart developed 30 to 50 years ago. So they are really these big, large-scale machines behind that. And if you talk to them, to the core banking systems, what is real time, some of them just say, yes, it's 30 minutes. We think that's not true anymore. You know, customers now interacting with mobile devices, they expect results immediately. So if those things, and just looking at any transfer you would do to your landlord, or maybe your salary get paid to you, how long does it take until your salary is actually on your account? It's not instant, yeah? Why not? And I think just now with the upcoming data natives, yeah, this is not acceptable anymore, and you would expect your salary now. And this is what needs to change, and why also some fundamentals need to change at one point of time. Yes, it's a high regulated market, I absolutely agree there, and a lot of things which we must ensure are working correctly, but it doesn't mean that even that is not ready for innovation.
Interesting perspective. And we're jumping from everything to everything, which is kind of given in considering what we're trying to cover in 5 seconds. But back to kind of how do you see yourself? Do you see yourself as B2C, B2B? I mean, you guys are in an interesting position because you're powering with your technology a number of segments. Where would you say you're placed in the big fintech game?
I think probably as we're more an infrastructure provider, way more B2B than B2C. But I think also kind of coming back to the question, is fintech something that is happening B2C or B2B? I think both is closely interrelated. It's not one or the other, it's actually one and the other. So if you look at again of your everyday experience, are we willing today to pay with the phone and like entering like a 20-digit code, entering a CVC code, entering our address over and over again to process a payment? If you have an online shop, you will see conversion rates on mobile phones are horrible. And I think the user experience is not good. And that's the reason why you have a lot of these wallet solutions, where you have a lot of the discussions around an Apple Pay and Android Pay. And I think the consequence from a user push to have a different experience of how we kind of interact with money and how we kind of pay for services has also consequences for companies, because as a company, it's, for me, really tricky to kind of figure out how do I improve actually the user experience, and how do I make sure that I'm ready for that kind of future. And I think that's what is driving the B2B part in this, that you have to have an infrastructure in the background who's actually enabling you to do all of that, and being ready to kind of scale in these directions, being ready when Apple Pay is launching in Germany or in another country, that you can actually kind of provide that service to your users and have this experience to improve mobile conversion. And I think that is a little bit also the perspective, like how we see Stripe, at least, in that kind of ecosystem, rather kind of an infrastructure provider, somebody who's helping to build the platform and offer that variety of services that like users actually want, and then taking somebody else in to kind of do the front end and the visualization and kind of the actual payment part. So it doesn't matter whether it's a PayPal or whether it's an Android or an Apple Pay. I think that is a game for somebody else and not necessarily for us.
So you're describing I'll get to you in a second, but you're describing the model in which the banks would become a pipe if they had a business case like you guys do. But they don't. This is what I was saying earlier. No big bank has a business case in becoming a back-end player like you do. You can make money on this infrastructural offering. Banks cannot to this point. But do you think this is interesting? Is it an area where we're going to see more of players who are going to become the, if you wish, the sandwich layer in between the back end and the consumer?
So I think the points that have been made are really interesting, and they kind of depend a little bit on the level of development of the banking infrastructure. So the focus on the panel and in CreditTech was very much on a banking infrastructure that's very developed, that is very fast forward. If you think about most of Africa, if you even think about most of the developing world, they've usurped a lot of the infrastructure that exists here in Europe or even North American. How I think about it is, I think you have the physical world, which is the retail chains of banks, and then you have online, the whole online payments world, the online banking that is happening. And within that, you have three different layers, which is the infrastructure, the platform that's being created, and then the software layer that sits on top. And that can either be in B2B or B2C. B2C is just a little bit easier. It's kind of like when you make an online platform, like if you think about Amazon, in the early days of Amazon, you start selling books online. It's a really rudimentary thing. You put them online, you buy them, it's very, very simple. Afterwards, you start doing personal recommendations. You start having data layers that make this very intelligent. And I think what we're seeing at the moment is very basic B2C platforms, especially in things like fixed income, credit, payments, FX, all financial instruments that people understand, that are easy, there's no level of education required, and where the data and the algorithms and everything that we have in place is easier to implement. What Nasir was talking about in terms of more exotic or capital markets, a startup doesn't have the capital just yet to compete against that. They can't do that yet. So you start with basic B2C or easier models, and then when you do have capital, when you do have revenue, you start making it more intelligent.
So just to recap what we've said so far, it's access to understanding what's necessary, because it's the most logical. I mean, the startups we see, I'm a mentor for Techstars and Startup Bootcamp, and the startups we see are the very evident propositions that reach consumers first. I mean, so many people were unable to transfer some money to a friend. Surely that's a business opportunity, so they should pop up an international wallet. So there's a lack of education, if you wish, which is a bit weird, because we've been doing nothing but educating the market in the last 6 years, and we have hundreds of Finovate archives to look at. Then there's a lack of money, because it's much more money to sit around and think of a proposition that's deep on the data and is able to replace the algorithm that Nasir was playing with 10 years ago. And then there's also kind of, is there also a perception that if you're doing B2C, you're much more likely to become a unicorn than if you're doing the long road?
Absolutely. B2C is sexy, right? I had this discussion 2 weeks ago in London with some big VCs. There are firms that are getting massive premiums because they are B2C, because of their brand. You get a huge brand premium if you're B2C. B2B is nice and stable and often, by definition, because of customer acquisition, different in the case of, say, Stripe, where you're targeting digital native retailers anyway. But B2B is still a very physical sales and acquisition strategy, right? You have to go and knock on doors.
Yes.
Now, yes, you're delivering a digital solution, but it's much harder. But as a result, therefore, if you do make it in that sector, you've got some sustainable competitive advantage, because then the competitors, new entrants, have to come knocking on those same doors. And it's a big effort. What's very interesting with all of these sectors, though, and as it sort of moves forward, and sort of maybe if I can backtrack into the subject of this conference, is the data and what I think the new technology is going to be able to do with that data and the new set of services that will arise, that I did very much like on Alex's presentation, the services becoming almost individualized, right? Because of using contextual data that's going to be made available either from, you know, the track records that we're building up individually as companies, or potentially, well, specifically with PSD2, right?
European mandate,
PSD2, I mean, you can't even begin, it makes my eyes light up with joy, right? I mean, being able to get authority from an individual to provide them with some service and access their entire transactional data and history, and then to contextualize, analyze, and then to be able to make the service I'm giving them specific to them. I mean, that's
the holy grail of FinTech, right?
Yeah, that's the holy grail.
How many people do you think are able to do that? Not physically, that's going to be easy, right? Not legally, that's going to be easy. We have all the technology to do so. Who is a player that's smart enough to go all the way and use all of that? Right. So we're going full circle. These guys would disagree, I guess.
We think this is a really great opportunity. I totally agree there, and it will change a lot of things actually in the finance industry. Just one way we will use it, and I just started to do it, is that if you want to switch your account, one of the problems currently, beside the bureaucratic process, is that you actually want to have your direct debits as well taken with you as the standing orders. But how do you know actually what are the direct debits, especially in Germany? It's a kind of a hard thing, and you know that very easy if you have the transaction history of the last 12 months, and that's now by law. Also, the banks must provide that, so it will make customers again more mobile to switch between their bank accounts. And then again, also they say it's great because you can offer different service and quality of service if you have this data.
Are you guys doing aggregation today? Are you doing account aggregation for your clients today?
We just started, and now talking again about something insights. We just started a service which is called a account switching service. With the press of a tap of a finger, you can switch your account. And we offer this now for 1,000 users, and we will roll this out now step by step in the next weeks.
Right, so that's to switch accounts. I'm asking if you're doing account aggregation for your users, so can they see all of their financial relationships in one place?
So not now. Yeah, but what we see also that we are coming in, and it's our approach, how I see it, is it's essential that the customer doesn't want to have 15 apps to deal with that, and we see that this is a very great entry point if you can do it from our platform, directly accessing different financial services.
So you're keeping an eye on PSD2 in the same way that a bank would be doing. You're not.
Absolutely.
But are there any players doing it in Germany today? That are doing account aggregation today. Okay, it's interesting how it's. I wrote an article about account aggregation in 2011, and absolutely every word in it still absolutely was shocking to a bank the other day when we talked about PSD2. It's a very simple core concept that needs understanding, and if you understand that concept, it just unlocks a world of possibilities in terms of identity. But I think that's really, really exciting. So. Do we think there's going to be kind of, are we going to ask the horrible, is FinTech or banking going to win question? Can we skip that one? Can we skip who's going to make most money in FinTech as well? Can we, I mean, we just hear these things over and over again, and there's a point where we have to stop it. If you had like one thing to explain to a friend who's never heard of FinTech and wanted to know what excites you with this industry, what would you say it was? Shall we take turns? Because I'd like to hear everyone on this.
So for me, I'm really interested in user experience of how you purchase things, how do you think about your assets and money in general. So for me, what I'm excited about are the new ways that you just make banking effortless. Making a payment with my voice, for instance. I just call something up and I say, I want to transfer money to a friend, and I say the name and it's just done. So these kind of things are what I think are going to be really, really exciting for the future, to ease every single aspect of how we think about money, what do we know about money, even understanding it. Because to your point earlier, when you talked about education in FinTech, I think education in finance is just not there for the average person who hasn't got exposure to a lot of the assets that we see and look at.
Michael, thank you.
What's the question? What do I
Question,
find?
what is the one thing that you'd pick to be the most exciting thing? I think yours, if I'm not mistaken, was a combination between invisible banking and what I call money moments. Like once we get that cracked, it's going to be awesome. What else would you tell a friend is really exciting? Why are you in FinTech?
Data. It's true. I mean, all of what Videesha is talking to is actually enabled by the data underlying it, right? I can make there was the Rocket presentation an hour or so ago, where they were talking about all their service on demand type services, like the HelloFresh and the delivery services that are there. Transmuting that into financial services, pre-approved credit lines, specific credit lines, knowing exactly how much before you even know it that you want to borrow for your purchasing, being able to do invisible payments within stores by providing a lot of this is going to be enabled by data. The interesting side of it to me is how the mobile plays into all of this, and mobile data and usage patterns, and that's not at the moment being properly utilized because there's data privacy issues, but that's going to change a lot. If you imagine what you could do with the data of, say, Germany's prepaid card users, right, and their history of usage, top-ups, not topping up, the analysis you can do on that to make some inferences, much in the way Creditech does, on whether or not this guy's good for some money or for some other service, etc., and then to use that channel to deliver it as well becomes a nice integrated solution.
And that's probably just the tip of the iceberg. We were talking about this last night. I think what data science is able to offer and what banking is willing to take and use there's a humongous gap in there that needs to be bridged really quickly. There are no banking business models that would enable us to ask for the kind of information that data science is able to give us, because if there were, we would be able to do this contextually, it would be relevant, it would empower our lives.
Just one last quick example. So banks have all this transactional data. Deutsche Bank has 4.2 million bank accounts in Germany, retail customer accounts. With around 300,000 customer accounts, I have good contextual data on probably the top 30 retailers in Germany. With that data, I'm very, very confident that within a margin of error of, say, 1 to 2%, I could make a very strong financial projection for the financial results of, say, a large retailer 3 to 4 months in advance of them actually publishing their results. Now, even internally to the bank, that is extremely powerful, but they don't do it, right? They've got it all just sitting there, and they don't do it.
Well, I shouldn't use this example because it's a bit partisan, but I used to work for an Icelandic company that did that with Icelandic banks. So some banks do that, but they wouldn't be the mainstream European banks being open-minded enough about new business models, because that would require them to understand they want to monetize data, which is a dirty word in banking for now. What do you think is going to happen? What excites you, and what role would data play?
I'm coming from product development, so obviously technology excites me currently. And the thing is, it's today just so much quicker actually to get things done and create products. It's totally not comparable to 20 years ago. And this is what if you want to do machine learning, you want to set something up today, it takes you 1 month, and you have something which is really actually usable and is really actually smart. So that's really exciting. But what is also exciting, to be honest, everybody of you has an email address, but if you look at your bank account number, the IBAN, which is a 20-digit thingy, nobody can remember. I think in the finance industry, they have been focused too much on creating products for themselves, but not for the customer.
Right.
And this is also what the fintechs are changing. They're now thinking what you as a customer want. How can we explain it to you that you understand it? And there is, I think, a big opportunity which the fintechs now, just as Stripe, it must be easy to pay. It should not be complicated. Those things are changing, and you can do and make this actually happen because more information is digital. So you have all devices with mobile and anywhere where you actually can do things, but also the technology is ready that you can build those things quickly and iterate and improve rather quickly because to improve a branch of a bank is just so much harder. So I think this is what is currently exciting. There's now a dynamic coming where we build bigger and better stuff for the customers.
Very cool. You're the one to close us off in case there are any questions. So just make it very long so they don't get to ask.
Okay. So kind of what excites me about this, probably a little bit different, and I agree with all the statements that have been done, but I think the one enlightening statement that I had, or enlightening experience actually, was a week ago. I ran into a person that is running a company in Panama, and what I would say, I think the excitement part about payments and the potential that we get with digitalization in that area is to make commerce and actually our infrastructure global in a true sense. And the reason why I'm saying this is this person from Panama came to me and said they don't have a payment solution at the moment to run a company like Uber. So there is no structure or infrastructure to either do kind of direct payments via mobile devices within the cars, and then also no way to kind of automate the payouts and try to do this manually, like collect the funds in your bank account and then pay out to every driver manually with the team. As a startup, probably impossible. And what they actually did is, and I'm not sure even whether I can tell that, but he actually sneaked across the US border into Florida. He tricked a bank into giving him an account and set up an LAC with a US bank account to be able to use the payment infrastructure in the US to run his business. He's paying, I think, $500 for cross-border transfers every month, just because he processes all the payments in the US for kind of his Panama company. But it's working. The startup is running, and people are able to actually process payments for this. And I think these opportunities are basically opening up markets that are non-existent yet. I think that is something that is so exciting about this industry, and that is also a cool thing to work into to open up these potentials for use cases that we would have not thought of 10 years ago. I think that makes me at least excited about the payment space.
That's a very, very cool story. Thank you for that. And hopefully that doesn't get anyone in trouble. So thank you very much, everyone. Do we have questions? Oh. And these two can't answer it, so you go right ahead.
Great chat. The thing I found weird was when you guys were talking about B2B, everyone's mind was the larger enterprises. They would think about the larger companies. Actually, those form 1% of all the companies throughout Europe. 99% of companies are SMEs. That's about 20 million SMEs. So even with the whole brand and the valuations going up because you're B2C and that brand is stronger with critical mass, your B2B market is still quite large. You still have 20 million people companies technically, other than the employees in them, that you can still go through. I know Nasir is an expert in the SME market. We've had this discussion before. But I'd like to hear your opinions on this. Still, there is a critical mass. Why not approach that market?
So I'll rephrase what you said to see if I got the question right. So you're saying we touched on retail, we touched on capital markets, but we haven't really talked a lot about the SME market, which is a big opportunity without a doubt, right?
It is. And it's actually a recent trend. We've seen a ton of companies in this space, not just for payments, but also for data aggregation, especially on the for e-commerce and smaller retailers. But the problem is usually around cost. It's the unit economics that make this very challenging for a venture capitalist to invest in, because what they're actually paying for at the moment is your education of that particular group of people. So you pay a lot of money to educate a group of the long tail. It's also the reason why SAP and other enterprise clients haven't necessarily gone for the long tail, is because it costs money. It costs a lot of money. You need to build out a sales team. You need to go educate whichever SME segment type that you want to go after. And I think that's the prime reason why most people try not to start there. Try to start either a little bit bigger companies, something with 50 to 150 people plus, and then move into enterprise, because that's where they get a lot of the unit economics starting to make sense.
It is a bit of a catch-22. It's that exactly that. It's the customer acquisition cost is high, and SMEs, by definition, by their nature of their business, aren't going to pay you that much either, right? So the unit economics are hard. I see a lot of pitches that say, yes, look at the size of this wonderful SME market and we can capture it all. No way you can. What I want to see in a pitch for an SME business is somebody who understands the strategy of acquiring customers. Targets, SMEs are not the same, right? You know, a group of leather manufacturers in London relative to sausage manufacturers in Munich are not the same business and have different needs and expect you to understand who they are. So saying that you're going to target and sell to SMEs is a pretty big thing and is not something done easily. Although, yes, it is a fantastic opportunity, but understanding and getting into the nitty-gritty of what an SME is so that you can sell to them effectively and to do it in a way that's cost-effective is tricky.
If we have this on tape, there is a challenger bank or two in the UK who need to listen to exactly what Nasir said, sadly. Right, nothing else and we ran out of time. We're around for lunch, so I won't keep anyone from food. Thank you very much.